Good afternoon, everybody. It's Mortgage Rob here, your mortgage broker serving Cloverdale, Langley, and the Fraser Valley. This is your market update for October 2012. Halloween is just around the corner. That fall weather has already kicked in, but let's not let that get us down. It's pretty much good news on the interest rate fronts and mortgage fronts. I've got a couple things just to talk to you about this month. One is interest rates. We are seeing great news as far as interest rate goes. There is no discussion about rates going up anytime soon. We are seeing more lenders come into the competitive areas like the 2.99 and 3.09% 5-year terms. There's many lenders that are offering those rates on short-term specials. I have one lender, Invest Partner Mortgage, that's actually offering 2.94% for a 5-year term. That's got to close in the next 60 days, but a great alternative if you're looking for new financing. Plus, we've got a handful of lenders now that are offering 10-year terms at less than 4%. So a very good alternative if you're moving into, moving up into a house from a condo and you expect that you're going to be there for at least 5 years. 10-year mortgage could be a good opportunity if you are convinced that rates are going to increase in the future. So, great alternatives there. The other point I wanted to bring up, as I've had several discussions with clients over the last few weeks, was regarding interest rate penalties. If you had tried to refinance your mortgage maybe 12 months ago when rates were down at this level before, interest rate differential penalties were quite significant. Now 12 months has gone by, so possibly it's getting into that affordable range for you again to consider refinancing. But a word of caution on this time around, with many lenders, mortgage lenders, banks and credit unions all offering very attractive rates, very much consideration needs to go into what the penalties may be the next time around. The interest rate differential is what you got to really watch for, and the banks and credit unions and mortgage lenders all have different policies on how this is calculated. Mortgage lenders, who are typically available through brokers, don't have an interest rate differential to use. The discount that they use on an interest rate differential is quite different. Banks will offer, for example, 5.24% today on a 5-year term. You get a rate of 3.09 or 2.99. Well, when they use that discount over 2% to calculate your differential 2 or 3 years down the road, that's why the penalties are so substantial. Whereas a mortgage lender will offer 3.09% today, and then their differential is calculated just on the difference between that rate and whatever the remaining term is. So the penalties can be substantially different. So it's something, when you got two lenders, it could be a bank or a credit union and a mortgage lender that are offering you different rates or similar rates, it's the penalty calculation that may end up making that decision. So for kind of a summary of which lenders are going to calculate it different ways and what your best mortgage is going to be, feel free to give me a call. I'll be happy to go through that with you in a mortgage review. As always, you can reach me by phone or by email. Phone number is 778-686-8326. So for October, that's your mortgage market update. Hope you have a great month, and I'll see you in November.